The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome back to the Diagnostic Trading Hour here. I'm your host, Darrell Martin with TFNN.com. Make sure you also check us out on TFNN.mobi. If you have any questions, go ahead and give me a call today. You can reach me at 877-927-6648. Again, that's 877-927-6648. Let's go ahead and take a quick look at the market and where everything's at right now. Basically, we have the same old summertime low going on. A little bit of up and down moves, but in the end, flat. So right now we got the S&P sitting up point and a half. We got the Russell down 0.5. We got the NASDAQ up 5.75. And we got, looks like the Dow up 18. Oil is actually up about 49 cents on the day. And we got natural gas, just sort of moving around there. But right now it's just up 0.091 over previous day. And looking at euro dollar, pound dollar, Aussie dollar, Canadian dollar, U.S. franc, basically you pick your currency. They're pretty much flat on the day from the close of yesterday. And on corn, you do have a move up a little bit, starting to make a little bit move back up. We'll see how that actually pans out. But we're sitting right now at 2.25 up on the day from yesterday. And soybeans, pretty much the exact same. Set up in when you look at it, about 2 points up on the day. Gold down 7 points on the day. So big news today, of course, was the retail sales numbers. So they came out, and we got the retail sales information coming out today with all the information regarding different earnings. So, Walmart, Home Depot, all those guys coming out and releasing their earnings at the same week as their retail sales numbers. So, looking at those, retail sales came in a lot better than expected, and that's good news, and that's real good news. So that means people are spending, things are moving. At the same time, those numbers aren't exactly great, and it also means that there's less ammunition for the Fed to have to use for a QE. So, myself, I'd rather them just get out of the way, let the market do its thing, let's let it fall, then let's let it, realize, okay, we're consistent, we're here, this is what we're going to do, and then it can do its big takeoff after it makes this big crash. But, right now we do have retail sales numbers up, and those are some of the, better numbers we've seen during the year and even over previous years. So, not the best numbers, of course, but just, good things to keep an eye out for that came out at 7:30 Central, 8:30 Eastern. And if we want to zoom in on the charts and just sort of see, how did the market react to that, you can see the market was very favorable, and it shot up, a few points on the number, but it kept that for literally a matter of a couple minutes, and we can even go on down and look right at how it reacted. There we got the 1-2 basically minute rocket launch off the number. It literally gave it back within 15 minutes, did about a 50% retracement, and then gave it all back. And ever since then it's just sort of rolled around basically to where it was at right before the number came out altogether. And here just about, about 30, 40 minutes ago, market decided to go ahead and give up quite a few points, literally just a matter of a couple minutes. Almost looked like a retail sales number, but went negative. Right there, it dropped from 1405 on down to, 1402 or whatever. So literally about the same jump we got off the retail sale number we lost in a matter of just a couple minutes there. And market looks like it's heading back down to being at break even for the day. We also had the retail sales month over month. We had the core retail sales. If you don't know what those are, the retail sales goes in, and it's the it's the number that they release. They release about 14 days after every month ends, and basically it can be pretty volatile, and it can sort of have just an odd trend to it. And it's also the core retail sales is the retail sales without the automobile sales built in. Okay, so that's what core retail sales is. If you didn't know what that was, now you do. We also, have some other things that come out. We had like I said, we had the retail sales month over month, and that's the advanced retail sales. And this is one of the reason this number is important. It's one of the earliest numbers that consumers look at to get an idea on, sort of how things are going and how consumers are spending their money. Okay. And the third number, and again, the hard part is all these numbers came out at the exact same time. All right. And when you have several news announcements all at once, then, that can make things a little bit difficult for, really doing a news trade, because you can have one good, one bad, and it's not just the number, it's also did they revise previous numbers. So you may have a number that's really good, and so the news just explodes off of it, but then they also say, go back and revise previous numbers worse. So it becomes good and bad news at the same time, and you may not see that previous number revision as fast because you have to usually look in the news, or you have to dig down a little bit deeper, or, read the entire report versus just looking at the number on whatever, site or service you use for instant news announcements. And over on that, if you go in and look at, what is the PPI, it's basically the consumer inflation indicator. And it's when producers charge more money for goods, for services, and they pass that on to consumers. Okay? And again, this is the finished goods. All right? So this is not wholesale goods and, companies to companies. This is, end user prices. And the inflation came in right as expected at 0.3%. And so no increase or really decrease in inflation. And so that's, that will be some ammunition they can use as long as, inflation doesn't pick up any worse at the moment, which is going to be hard to do unless people are spending a lot of money. If people are spending a lot of money, if they're buying a lot of houses, if they're buying a lot of cars, if they're spending a lot of money at the stores, then, if a lot of loans, especially a lot of loans being sent out, which, of course, we know that's not happening, if a lot of loans are happening, then that'll start to, drive inflation. But until there's a lot of extra spending, inflation won't take place. And then, of course, you got to watch out for inflation because you get inflation bubbles like in the housing market. So, and the Fed's job is apparently to curb inflation and keep it steady. And it's really interesting. They want to keep it at 2% a year, but they don't mind lowering the interest rate so low. And this is something that a lot of people don't think about, is they don't mind lowering the interest rate so low that you're basically paying money, okay, to buy bonds. Because if you go in and your yield is less than at least the minimum inflation rate, and remember, that's not including things like food and energy, okay? If it's not covering at least the minimum inflation, you're losing money. And, of course, if it's not covering things like food and energy, that's some money you're going to need later whenever you take those bonds out, then it's losing money. And there is a strategy to that. There is a reason for making it almost a penalty to buy bonds. And the strategy is, if it's painful enough to own the bond, you will put your money in the market. And that drives money towards the market. They're like, you know what, I can't stand to lose this kind of money. And so I'm going to put my money in the market. People put their money in the market, take on more risk in the hopes of better gains. And that is one of the number one reasons for having very low interest rates, is to basically not incentivize people to save money in the bond market, but rather to invest money in the stock market. So a lot of people don't think about, the game that's played right there psychologically on keeping those rates low. And that is one of the biggest reasons for that game. And, also we want to look at what's coming up, the rest of this week. So right now, this is Tuesday, Wednesday. Very important. You want to make sure you keep this in mind, especially if you're an overnight trader at all. France and Italy are going to be having a bank holiday. So that is going to subdue the markets a bit. Also, of course, that also do, bond auctions, things like that. So France and Italy having their bank holiday tomorrow. And, again, that will, lighten volume. And we already have light volume, right? So we got the summertime low, volume's light. That's why you can get these easy 3-point moves in a matter of a minute or two. And so that'll just add to it, all right? And then, as far as, let's see, going on tomorrow in more detail here, we got the core CPI, and that's going to be happening at 7:30 tomorrow. At the same time, you have the CPI month over month. And we'll have the Empire State Manufacturing Index. Out of those three numbers, the most important number will be the core CPI. And basically, that is also an inflationary index. And again, it is, excluding food and energy. Okay? Some people call the CPI, X food and energy or underlying CPI, but the core CPI number, that's the big number. And it basically, for a majority of inflation, except for what you spend every day to drive and eat. So a couple of the basic necessities you need to live. It doesn't include those. So you got to love that game. And basically they say the reason that they don't include food and energy is because those things can be so volatile and they can't control them, because things like wars, droughts, seasonal tendencies where, prices go way up one year, like, corn, spiking 20, 30, 40, 50%, whatever. That's not their job to control that. I get that. I wish there wasn't a job there at all for them. But, it also they ought to give a CPI number that actually shows real inflation that the government has to report. But they don't really want to do that. That would not be in their favor. So those numbers are going to be reported tomorrow. And, again, you're going to have that subdue, a little bit, even less volume than we're already seeing. Just because, again, France and Italy being closed. And then we'll have a couple other things coming out. We're gonna have some long-term purchases. We're going to have some capacity utilization rate, industrial production. Those come a little bit later. We're going to have crude oil inventories. We got that every Wednesday, except for whenever there's a holiday. A lot of times it'll bump that to Thursday. But we have that pretty much every Wednesday. And then Thursday we are going to have retail sales month over month. So, and today, what did we have? How does that, vary from? We had core retail sales. All right. So retail sales month over month on Thursday, and it's actually considered one of the primary gauges for spending. And that's going to come out, and that includes, a lot of additional information. That's all retailers' sales. Okay. So that's going to include things like auto in there. And then later we'll also have building permits on Thursday, again at the exact same time, and unemployment claims at the same time. So again, remember, when you have all these things coming out at the same time, when you're looking at retail sales, core retail sales, building permits, unemployment claims, all those coming out on the same day, and what country are they coming out from? Like, Britain has retail sales Thursday, the U.S. has building permits and unemployment claims. So what if building permits is horrible and unemployment claims is great? It's going to mess with the market as it, processes both numbers as all those automatic trade engines are firing off and people are placing their orders. And then we'll have the Philly Fed Manufacturing Index on Thursday. And that's basically, they survey 250 manufacturers, and they find out basically how do they feel about business conditions, hiring, spending, investing in the market. And pretty important number. It's been very, very negative lately. And they keep trying to, say it's going to be higher and higher and higher, and we'll see how they feel. We'll find out real soon. So that number could definitely be a positive number, and actually maybe beat expectations for the first time in a while. So if we look at that number, we can see that it's been pretty low for the last few months. And then we go over and we wrap up our week on Friday with core CPI and University of Michigan Consumer Sentiment Report. And the core CPI number is another big inflation number. And so we're going to see that. That's going to come out of Canada. And but that's going to be at 7:30, so it's going to influence our markets right at the same time as all the other CPI numbers come out. So we'll come back, we'll wrap some stuff up, we'll look at the markets and see what plays we may have remaining for the day and what plays you can do tomorrow. Stay right there.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, this is Darrell Martin here with the Diagnostic Trading Hour here. Welcome back. Give us a call with any questions you got, 877-927-6648. And market's still pretty much flat on the day so far. Nothing big has changed. We do have a few things going on, so let's check it out and see what we can come up with. Looking over at the currencies, looking at really just the market in general, you can sort of see just the market who got the advanced decline ratio and how the New York Stock Exchange, basically stocks are just really starting to push down. And this is called the Broad Market Index, and definitely suggest if you're trading any of the major indexes, really any stock period, this is a good thing to use if you're trading any index futures. Honestly, if you're trading the bonds, if you're trading currencies, all this stuff comes together. And so you want to be looking at this. This is one of your most important indicators you want to have up. And it's a data series. What it's doing is it's adding all the stocks on the New York Stock Exchange that are going up, that are advancing, and all that are declining for the day. Okay? And then it puts the summary together, and you have the advanced decline ratio. So I have it here in NinjaTrader. You could also load it in Think or Swim. If you put it in Think or Swim, it's going to be $ADVN. Okay, so $ADVN minus $DECN. And you can watch it right there. And you usually want to break it down to maybe like a 5-minute period just to sort of see how our stock's trending overall. Because sometimes you get that thing stuck in your head that just says, oh, the market's going up, the market's going down. And this right here sort of shows you what the whole market is doing. Okay? And so definitely something that's a very helpful indicator. I like to use it every day. And always looking at it. It's not so much going to, determine your trades for you as it's going to be a confirmation of your trend or when a trend's starting to go flat or, starting to turn around. So definitely a helpful tool, and I highly suggest that you do use it in your trading if you're not using it already. And you can get that through. There's a lot of different ways to get it. So I just showed you 2 ways. One in NinjaTrader, another one over there in Think or Swim. And, looking at a couple other areas of the market and just sort of seeing what trade setups might be there, one of the things that we always do is we do like to look at Nadex. But before I get to Nadex, I want to bring up something I was looking at earlier that I think you should be looking at and just sort of be aware of, because this is an interesting little, I guess you could call, phenomenon, right? So let's go ahead and bring that chart up. And looking at the VIX, okay? So got VIX over here, and it's doing quite a bit in the downside. And that's not necessarily a horrible thing, except for you need to consider when was the last time it actually reached these lows. All right? And so you can actually see that it reached these lows last time over here and back in June of 2007. Okay? So either we're about to run up to about 1550, 1600, all right? Or, say 15,000 on the Dow or whatever. We're about to do a run up, or we're about to have a crash down. So we are, just like I said, pushing those lows, and just with these little slight trends and, everything just sort of moving up, and sort of like 2 steps forward, 1 step back, and dangerously low VIX levels. Literally, we have not seen these levels since pre-crash era, and basically right before the crash started. And if you want to, we go ahead and zoom in over here and check out. We go in, and like I said, let's find the same area. We got our low right here on the VIX today of 1367. And so let's find the last time we had this low right there, June 2007. So before we actually hit, the last time we actually hit that low. So if we go over here to June, and we're checking that out, then we can see, well, what happened? Well, we got, 1, 2, 3, 4 months there. And then, we ran into a bit of a snag. And starting in November, and then just bam. So basically October hit the peak month, and then it actually was a down period. So for the remainder of the year, and if you look at that, I want to zoom in here on the S&P for you. Let's just see this a little bit clearer. And let's see right here, October, November, December, and then, think about that. November, December usually are not bearish months. They were bearish months. So, and those were, the few months following. So again, we got June right here. We got back up a little bit. We got May and June. We got June right here. And it basically flip-flopped. 1, 2, 3, 4, 5 months. And after that point, it started a big move down. So, this could carry us through basically to the election. And we could have just, like I said, a little run up. So we could go up 100 points or so. Or it could just be the top. And the thing can turn over. So I think what's going to be the deciding factor is going to happen in about 3-4 weeks here. 2 weeks, of course, we're going to have the Jackson Hole. That could have an impact. 4 weeks, we're going to have the German Supreme Court deciding whether or not they're going to be on board with the whole EU bond issue. So stay right there, folks. We'll come back. We'll check out Nadex and see what trades we might be able to put together. See you right after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And again, if you have any questions, also feel free to call in and on any of our shows. Call in 877-927-6648 and make sure to listen in on your mobile phone as well, wherever you go, tfnn.mobi. Looking at the markets, pretty basic right now. Still going pretty flat. And looking at those, there's not a whole lot of big movement happening, just sort of oscillating up and down. And even the currency's pretty flat on the day. And so looking at all that, let's go ahead and check out if there are any plays. And I'm flipping through some charts, checking things out. When I am doing this, one of the things I'm doing is I'm going over to nadex.com. And if you want to get a Nadex account, what you can do is go to tfnn.com, click on the Nadex banner, and right there, as soon as you click on that, you're going to see Create Account at the top side of the page. Click on either Start or Want a Test Drive. You get a test drive, you get a free demo account for a couple weeks. If you feel like you need a little bit more time, just call and let them know. But go ahead and click on Open a Demo Account, and you can fill that in with your username, first name, last name, phone, and email address. Hit Apply for Demo. That's all. All right. Right after that, they're going to send you a password. You'll be able to sign up for you'll be able to log into your account. And but you're talking 15 seconds. Okay. So you can start demoing this and checking out what it's all about. And then as soon as you do that, just click Log In after you get your email. And literally you'll get your email within a minute or so. And then just put in your username and password, and you will be able to log right into your account. When you log in, this is what you're going to see. And you'll see all the positions on that you're looking at trading and how you can take advantage of those and things that you can do. And so yesterday we put on an oil spread. That spread went pretty well for us. I made a couple $100 on that trade. And so right now I just want to look around the markets and just sort of see if we can find anything that adds up for us. Whenever we're looking around the markets trying to scour for trades, and when we're doing it in the middle of the day, especially, then I'm always also looking at standard deviation levels. And I'm not talking about your classic ATR standard deviation that really is just that's it. It's an average true range. I'm talking about your future standard deviation, your expected move using the options market. And implied volatility needs to be factored into that number when you're figuring it out. And there's a lot of different ways to put it together. And I use different tools. I'm actually working on a tool right now that we can give to the users here at TFNN. And if you go in, and let's look at a couple markets right now that have actually had a little bit of movement on the day. And so there's not a whole lot of them, but we definitely can say, gold has, it's dropped 10 points. So let's check gold out, and let's see what we got on the gold side. So on gold, we're going to pull that up. And let's see here. Let's just make sure we have some time left on the gold market, because I know the gold pits trade so early. And basically, I don't know if you know this, but the gold pits, they're going to close pretty early on the day. And even though you can keep trading on the Globex platform, if you go to cmegroup.com, this is sort of just a good lesson for you if you're trying to learn this stuff. You're trying to figure out details, hours, tick sizes, tick values, all that stuff on the futures, cmegroup.com. So if we go to cmegroup.com, we go to, say, CME Globex, and it says, choose your asset class. Well, for gold, you check metals. And so you can check metals, and you can go over here, and then, it'll have the details on metals. So now you can go, okay, well, I want to check out the gold contract. So we got GC Gold. And then right here, you got contract specs. So click on contract specs. And then right under that, once that pulls up, it gives you all the data. Well, usually. I guess the CME is doing an update on their website. Let me pull up a different one here. We'll just pull up an equity index like the... we'll go in and pull up even the S&P 500. Let's see if they're having errors too. They are. They're updating their site. Okay. So basically, it goes in. What it does, it shows you, of course, the outright tick, which is what you want to be looking at usually, unless you're doing what's called a calendar spread on futures. Most people don't know what that is. So if you don't know what it is, it's a great way to trade. It's an awesome way to trade. But and it's a lot lower volatility way to trade. But just to focus right now on just outright ticks, it says, hey, it ticks in 0.25. So every 0.25 is how it's going to move. So it's not going to go like 1 cent, 2 cents. It's going to go 0.25, 0.50, 0.75, $1. It says every tick is worth $12.50. Well, why is every tick worth $12.50? That's so weird. Well, if you have 0.25, then 4 ticks in $1. Okay, right? So 4 quarters in $1. And that means a $1 move is worth $50. Well, why would $1 be worth $50 instead of, say, $100? Well, on the S&P full-size contract, the SP, on that contract, the floor traders trade it, it actually is worth $100, okay, per point. And it ticks in 0.1, 0.2, 0.3. Well, the minis, half the value. So instead of being $100 a point, it's $50 a point. So that's how they came up with the number. That's where $12.50 comes from. So $12.50 plus times 4 equals $50. And a lot of people are always confused about why those numbers are so weird. It's when you fully understand the contract, it's $100 a point. It's a mini, so it's a half of that amount. And so it's $50 a point. And since it only has 4 ticks and $50, that means every tick is worth $12.50. But also you can go in here and you can see the Globex hours. And, they'll usually also have on here somewhere, they usually have they'll have the pit hours too. They obviously are going to have the pit hours for the CME E-minis because they trade the full-size contracts. And but you can go in and let's see if they have gold working again or not. And if they don't, then we'll just move on from that lesson for the day and come back to it on a different day. So there we go. All right, so they got it up now. So open outcry. All right, so you got the Globex and you got the open outcry. So the Globex showing what hours basically you can trade gold electronically. This shows what time the floor traders are trading it. So you're going to catch it first thing there, let's catch it the first part of the hour. And but basically 12:30 Central Time is when the floor closes down. Most of the Nadex products, they try to close out with their floor traded. They try to match the floor hours for their closing times. Okay, so that's why gold closes at 12:30 on that. And so with that, let's go ahead and hop over and check out a couple of the other markets, other possibilities of we might be able to grab onto. And let's see here. I am checking out, let's see what we're looking at. Soybeans, corn, natural gas just keeps moving. I've got a lot of buy signals on that today. So let's see here. If I go over here to commodities and I go to natural gas, and I got a little bit of time left on these trades here. So what I'll do is my Nadex account. So you can see right here, closes at 2:30. And then you got the dailies also going to close right there at 2:30. Okay, so knowing that I have these are really my trades that are available to me. And so I want to figure out, what is a good potential trade setup for me. And with natural gas right now, if we want to pull up a chart on it, then what you can see, and by the way, there's two ways to pull up charts on natural gas. One is to use the master spread, 1,000-point wide spread here. And I can just click on that and literally click on the chart icon. And even though this is not going to be the natural gas future contract, okay, it is going to be very close to the natural gas future contract. So if I go in and let's say on Thinkorswim, I want to open up a 5-minute natural gas future contract. So I'll open that up. And I need to make sure it does match the same month. So I want to make sure I'm looking at September. Notice how it says September is the contract month that the Nadex spread is following. So if I go over here and look at it, then you can see we're basically right on with this, basically no tick or 1 tick difference at any given moment there. But I can zoom in to, make it look a little closer, and I can change it over if I want to get it really lined up, make it a candle. And, so that's what you can do. You can use that master spread as an underlying, substitute chart. So not necessarily an underlying chart, but a substitute chart. And it's usually pretty spot on. So it's something that's, it's a great tool, great resource until you get actual live future charts. You can use the live master spread chart on TFNN for that product. So, looking at that, looking at natural gas, like I said, it has been moving a lot today. And, so let's go ahead and check out these standard deviation levels on natural gas. All right. So on natural gas, if I want to pull it up, since the market's open, we still have some potential trades. Let's see if it's maybe worn out its welcome on this big meteor rise it's had today. And what we're going to see is, if I'm going to go in, I'm going to look at a plus and minus standard deviation for a 1-day move on natural gas, and I'll be able to see, let's see here. I'll pull up the numbers. I'll do the calculations for you. Like I said, we're going to have a tool that's going to do this for you automatically. And it looks like we have a 0.077. So what we want to do now is we want to pull that same natural gas chart up. We want to go, okay, well, what was the closing price? And this is something you're sort of going to need the live charts for. You could actually do end-of-day data charts, and there's a lot of free resources for that too. But if you have a Thinkorswim account, though, a lot of times they'll have it in there. You'll have delayed data if you don't have your account funded. But you can go in here and go, okay, well, what was the closing price? I'm going to switch back over. I like looking at bars inside this platform. And so right here we got the closing price at 2.75 yesterday. Okay, so with that, then we can go in and pull it up. And I'm going to just double check to make sure, because sometimes they throw in a different symbol, and I want to make sure we have the exact right one. So it looks like we're good on that. And we're going to add in our closing price. So always take your closing price of yesterday, being 2.75. And then we're going to add in deviation moves. And sometimes these deviation moves can go sort of crazy. But if we go 2.75, and then we want to go in. Okay, so we got that number down. And now we just want to, like I said, you want to make sure you have the standard deviation that includes implied volatility. And I cannot stress that enough, that you need to make sure that is the number that you're using, and not just a regular standard deviation that's based on historical volatility, because that's what's happened. We want to go, what does the market expect to happen? Okay? And it's even best to do these numbers at the close of the day. But we'll go in, and that puts us at 2.0827. Okay? So we hit that number right about here, and you can see it sort of popped up, fell down to that number again, and went back up a little bit. So that definitely, it slowed down since it hit that. And I can even go in and I can add in another standard deviation level. And what I'll do is it's called add a slice over there on the platform. And what that'll do is give me a second standard deviation. It's not going to be quite double. Sometimes it is, very close to double, but just to give us a number on how far could we expect that. So, gotta double check that one. Let's see. All right, so 156. So actually a little more than double in this case. So that would actually put us up a little bit higher. If we go 2.75 plus 156. So 28.56. So how high did we get? Let's check out. What's our high right here? And our high looks like on the day for this is we're up at 28.48. So it looks like it's sort of slowed down. It sort of hit this level area, and we had quite a bit of volume right around that area as we hit this, this little dip right here. So a lot of people getting out of their trades, flattening out. So with that, now what I want to do, okay, to figure out the trade, once I go, okay, well, we got one standard deviation, we got the second standard deviation, and that one has been, pretty close to hit. I know we didn't hit it, entirely, but we did get, literally just like, 10 ticks or so away from that. So, it's not going to be, sometimes it's literally on the money, to that penny. But usually it's going to be within a 80-90% range, sometimes smaller, but 80-90% on most days of one of the standard deviations. And so I want to go okay, well, what is the high? So looking at the contract, and I see a high right here of 2.848. All right? So if I got a high of 2.848, and then I want to take away one standard deviation. That's what I should expect it to potentially fall down to, okay? 2.771. So right down to about this level, and that even, could line up with, sort of the last little bounce right there. And but 2.771 on the chart. There we go. And we definitely see some oscillation movement right here. So that's the number we'd be looking at. And then again, the way that we got that number was we took the high of the day, okay? So 2.848, and then minus 0.0771 standard deviation. So if we want to go short on Nadex, how do we go short on Nadex? All right. If we wanted to say fade this play right here, we think the natural gas is done. It's used up all its steam for the day. It could have a pullback now. It could have a pullback that amount, or maybe just half. A lot of times you'll just have a 50% retracement. Okay. So we're going to go in and pull them up. We want to find one that's as close as possible to where the Nadex is currently trading. And so with the Nadex currently trading at 2.840 right here on the September futures contract. All right, then we're going to need one as close as possible to that price level, and we'll see what we got. So 2.840, let's see, got 2.090. So we can go ahead and we're going to add this one to our watch list, and then we're going to go down and see what else we got. We got basically the same thing right here, that 3.0. This one's going to be lower, so it's going to require a pretty big move down. And we're not quite sure if we're going to get that big of a move down. I'm going to throw it on the watch list just so we can look at it. And let's see here. These are not going to be real helpful. So now we're going to go down here to our watch list. You can pull it up. And this is what we got. So now we can open these up and analyze each of the 3 box spreads side by side. And in your accounts tab, there's a setting up here where you can actually make it where you can open multiple tickets in the same window. So you can open several at one time. It's helpful for situations like this where you're trying to compare things. So we go in, we got one $63 and $137 award. This one's going to have a $163 and a $237 award. So $100 more risk, $100 more. So we'll go ahead and look up which one we want to do and wrap up the trade when we come back after the break. So stay right there for the folks, and we'll come back right after the commercial break. All right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. investments. Distributor, Foreside Fund Services, LLC.
4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, LLC. 4 Fund Services, L
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour here with Darrell Martin. We're going ahead and just put on, this is literally a very short-term trade. It's like a 5-minute trade before the expiration of the spread. 2,700, 2,900, 2 p.m. on natural gas. Went short 5 contracts on it. So we'll see if it moves down. Obviously, I don't expect any kind of big move up. But right now we have a caller. Let's go ahead and take the call. We got Maurice from Landover, Maryland. How's it going, Maurice?
All right. How you doing?
Hey, doing great. Thanks for holding on there for us. I appreciate it. So what questions you got?
I had a question about a call option. Well, actually a call spread that I bought on MetLife. I have a 34-35 call spread on it.
All right.
Know what you thought about it.
All right. So let me pull up Met for you and check it out. And you got a 34-35 call spread that you bought?
Yeah. Remember.
And what price? Let's see here. What price did you buy it at?
I can't even remember because I bought it yesterday.
Let's see. Well, if you bought a 34-35, then it's going to be pretty close to full value. If it's you're talking about MetLife, right? MET. So it's already up at 35.
Yeah.
So, I mean, your question is about just MetLife in general or the spread? Because on the spread, I mean, you probably are pretty capped out on the value there. I mean, there'll be a little bit more value built in. With it already at 35, you got to be moving up. You have, a little bit of profitability left in the trade.
Just wanted to know what you thought about the direction that it was going in.
Oh, I mean, it's definitely, obviously it's been running up like crazy. It is running into a bit of a resistance level right here. And so we're going to see if that plays out over the next few days. Being a September call spread, if you're long it, you're going to want to be out, probably at least probably in the next week and a half, just because once you get in that last 30 days before expiration cycle, that time value is really going to start ticking against you on the theta. So I'd see what you get on the next few days. We do have a few decent reports coming out, and I'm just trying to see. Let me pull up just a MetLife chart on one of my other charts here. I'll pull this one up. I'm going to switch over to daily and pull it in. I'll give you an exact analysis on it for you.
It looked like it was topping out a little bit.
Yeah, I mean, it's right up there. And, you probably bought it. If you bought it yesterday, you probably got it for about 35 cents or so is my guess. So you're probably up about 10 cents on the trade right now. And, you can, make up to another 50 cents if it gets, really deep in the money there. But it's going to have to get about $3-4 more in before you're really capturing a whole lot of profit on the trade. We're just definitely, we've been, flat for a week. But at least you got it on a little down spike there yesterday, instead of depending on what time of day you bought it. And we're still technically in an uptrend on Met, so that's in your favor. But like I said, like right here, we got this support resistance area, and it keeps hitting them. Now, if it breaks through that, there's not really a whole lot to hold on to it. So it's like this level I got right here is 93.72, or not 93. That's not even I'm sorry. So I had my oil contract up, and I wanted to switch over to daily for you, and I didn't pull it up. All right, there we go. So same thing here. Okay, we got this major power level here, 35.07, and our high on the day right now looks like is 35.25. So it did bust through that a little bit. It's backing off. With the VIX at a low, if the market keeps climbing, it can work for you, but it's going to go with the market. But I'd definitely be out of that trade within a week if you're not, if you don't see some good action on your side. So.
Okay, thank you.
All right, you bet. You have a great day.
All right, you too.
All right, thanks for joining us. We'll see you tomorrow on the Diagnostic Trading Hour here with Darrell Martin at TFNN, 12 to 1 Central, 1 to 2 Eastern Time. Y'all have a great day.